Well, what's encouraging today, I know it's not a very high volume day. It's the first day of a series as well. But what's encouraging is that the markets are continuing to build on to some gains. You have Ultratech Cement that's moved to the high point of the day. JSW Steel as well as moving higher. And big boy Reliance Industries, actually that's taken a leg up. And that explains why, in fact, the Nifty is moving higher as well. So keep an eye out on Reliance Industries and ICICI Bank. Both of them move higher as we speak. We have some statements that are flashing for you on the screen. Naresh Goyal, he's telling his employees that they're making all sorts of, efforts in terms of, maximizing revenues out there. And he's also talking about rationalization of routes as well, while admitting that 2018, indeed, it was a tough year due to Brexit, US-China trade war as well. So those are the closing remarks that Mr. Naresh Goyal is making to all his employees, and they are flashing for you on the screen as well. Deleveraging, that's something that we're looking forward to. If that happens, then in fact, maybe in fact the stress on the balance sheet will come in lower, and that's the key trigger for the stock going ahead. The tailwind we already know is that crude oil prices have declined, which is good news because ATF prices as well will move lower. But let's move on then, and as promised, Kansai Nerolac, that's the stock in focus. Remember, the company will acquire 100% equity stake in Perma Construction. To discuss the revenue potential of this particular acquisition and other details, we have with us Mr. H.M. Baruka, the Managing Director of the company. Hi, Mr. Baruka. Compliments of the season, sir, and thanks so much for speaking to us here on CNBC TV 18. In terms of this acquisition of 29 crores, Perma Construction, that's the company that we're talking about. What's the revenue that this particular company does? You'll definitely be looking to scale it up. So to what level are you looking to scale it up? And do you have to invest some more money?
Yeah, good afternoon to all my CNBC colleagues, and birthday wishes to Lata. Please pass on to her.
We'll do that.
Yes, we of course bought this company at around 29 crores, and it's a small company into a niche product, construction chemical and tile adhesive. And it actually just synergized with us because we are also supplying to the builders, we also supply to the dealers. So same network we would be using in selling this product. And this company is concentrated more on the western side. So as you rightly said, we would try and scale it up to the other market. And we hope to, scale up to a higher level in next 2-3 years.
Some numbers, sir?
Maybe in 3 years, we would like to triple the turnover.
Okay. All right. What is the current turnover?
It's about 28 crores.
Okay. So in 3 years, you look to triple the turnover. Will that require any kind of additional investment and also the kind of margins that Perma currently enjoys?
So the current margin is about 7% EBITDA, and we hope with our synergy we would be able to increase it.
Okay.
We don't expect much investment on this, but as we increase our sale, perhaps we would expand our manufacturing side to the northern side as well, but it's too early to talk about it as of now.
All right, Mr. Baruka, so that's a small acquisition. We'll keep an eye out in terms of you tripling those revenues. Should be around 100 crores odd in the next couple of years, as you're telling us. Let's focus on business then. B2B constitutes a bulk of your business, isn't it? What is the percentage that comes in from there?
Yeah, approximately 45%.
45%.
Yeah.
On those contracts, that's the B2B sales, you normally have your prices that are fixed. Now, assuming that maybe a month and a half or so ago, if you had fixed your prices, then today you would be gaining, right? Because crude oil prices have crashed by nearly around 30%. Is that correct?
I mean, let us look at this way. The crude oil prices have went up by more than 50%, rupee depreciated by about 7%. And so for us, increase in cost was more than 15 to 18%, and we have not been able to pass on this increase to our customers. Okay. So maybe marginal increase we were able to pass on. So this reduction doesn't actually help us much, number one. Number two, the reduction in crude oil still needs to be converted into derivatives of crude oil. So the crude oil has gone down in last 2 weeks. We are yet to see reduction in the raw material prices as far as we are concerned.
Okay. Let me come in on the industrial demand. About 35% of your revenues, I believe, come in from the automotive sales. And over there, we've seen a fairly damp festive season sale. So what kind of volume growth are you likely to post in the December quarter on the industrial side as well as on the decorative business side?
So you're right. Actually, decorative business has been doing quite well, but automotive business last month you saw the numbers were not very good. Even this month number doesn't appear to be so bright. And so we expect auto numbers to be slightly lower even in the next few quarters, according to us. It's a cycle, 3 years up and maybe 1 year or 2 year down. So right now we are seeing some slowdown in the auto numbers, but we'll have to wait and watch. And I'm sure with the election year coming in, and if government does something which is to pump the economy, maybe we will see a good growth at least in the two-wheelers industry. Yeah. So auto industry is definitely a sign of worry as far as we are concerned.
But overall volume growth, will it be similar to what we saw in the September quarter, or will it be a little lower?
Let us wait and watch. Right now, as I said, the decorative is definitely better than the earlier quarter. So from that perspective, whether we would be able to compensate the slowdown in auto number, I think we'll have to just wait for that.
Decorative volume growth in Q3, how much has it been?
It should be better than Q2. That's all right now I can say, because we are around the corner, so we would not like to talk about it. Okay. But should be better.
Just to get back to the earlier point, Mr. Baruka, you said that cost went up by 15 to 18%, and you took some price increase, though you couldn't pass through the entire, hit in terms of cost. What was the price increase that you took? And if that is the case, will margins see a contraction in the in the third quarter at least?
So if you look at, first 2 quarters, our margins have been coming down purely because of this. In case of a decorative, we have been able to pass on the entire increase. However, in case of industrial, it is a contract customer by customer, long-term contract, and it is not that when the cost goes up, tomorrow we can go and increase the prices. So I think there's always a big lag effect. So of course, we were not able to pass on. And as I said, how much we were able to pass on, it depends on customer to customer.
No, but approximately, what was the blended price increase?
In case of industrial, I would not like to talk about it because, as I mentioned, it is customer to customer.
Okay. But on a blended basis, should we see any kind of, price changes? Would you be looking to revise your prices in the coming quarter?
We would like to certainly protect our margin, but it all depends upon how the crude oil and the rupee behaves. And we would like some stability on the crude oil price, whether it remains up or it remains down, but volatility doesn't benefit us.
Okay, makes sense. All right, no one likes too much volatility. But Mr. Baruka, if you could give us a few details, what is the current capacity utilization levels you're functioning at?
We are functioning at about 75%.
75%. Right. You had plans to increase your capacities as well going ahead. So what level, what's your current capacity? Where do you want to take your capacity in the next couple of years? And what kind of capex will you have to incur to take it out there?
So we had utilization of about 82%, and we had announced 3 greenfield projects, one of which has gone on live stream, which is in Gujarat. So that is why utilization has come down to 75%. And the second one we would start perhaps in the month of April. So around, and we have a third one which is announced in Vizag, which will be 2 years hence. So if you look at, if you presume a growth of 12%, where utilization was 80%, so around 70 to 82% would be our utilization in next 3 years.
Okay. If you can just update us on your current market share, both in the decorative business as well as in the industrial side and even on the automotive segment.
So approximately we have about 58 to 60% on the automotive side. On the powder coating, we have about 35% market share. On the decorative side, we have about 11 to 12% market share. So this is the numbers overall.
There hasn't been any change in the last few months because these were the numbers you gave us even the last time we spoke.
Yeah, actually, market share has not changed much in the industry, and as I said, it doesn't change month on month. Actually, the industry has been doing well, and all the companies are doing well. So I don't think it's a significant increase or change in the market share which has been seen by any player.
Okay. Your own estimate of what the industry volume growth might look like in FY19 and even in FY20, what is your estimate? Is it going to be a better year for the industry compared to FY19, or do you think this whole macro uncertainty could cloud the kind of spending that we'll see?
On the decorative side, we definitely see a double-digit growth. I don't see any challenge when it comes to decorative. On the from the industrial perspective, I think automotive definitely looks down for at least for 6 to 9 months, and other infrastructure on the and the white goods, we do expect higher single-digit growth.
Okay. Mr. Bharuka, we leave it at that. Thanks so much for joining in. So that's Kansai Nerolac telling us about the acquisition that they've done, Perma Construction, where they look to triple the revenues in the next 3 years, so close to about 100 odd crores, and improve the margins from the current 7 odd %, hoping for stable crude prices, and will look to protect their margins. And they're a bit concerned about the slowdown in the automotive business, considering that they have a market share of close to about 58 to 60% there. Let's move on and get chatting about Oracle then, because Oracle, the database giant, is betting big on cloud-based software services, and India has been at the helm of this growth. From double-digit growth in software as a service market, India has now become the top-performing region in the Asia-Pacific market. To understand a little more about SaaS, or software as a service, earlier this week I caught up with Prasad Rai, the India SaaS head of Oracle, who told us, the kind of potential SaaS has and what Oracle's dreams and ambitions are in this particular segment. Listen in.
Out of a total software applications market of about $180 billion globally, 75+ billion currently is from software as a service, and this is growing much faster than the traditional software. So the Indian growth as far as the SaaS is about 31 or 32% year over year, and our Fusion ERP growth, which is the cloud growth, is in excess of 50%. So we are actually outpacing the market itself and acquiring market share from the competition. So, and we've seen this happen not just in this financial year, we've seen that happen in the last couple of financial years too.
Okay, what is your current market share? And if you could just give us the pecking order, say, compared to a Microsoft as well as the other large players.
I would think we are very close to being the market leader as far as this is concerned. It's just a matter of a few quarters more where I think we are in a better position to be the market leader in SaaS. We have quite a few of the largest and iconic customers in India that have moved from on-premise solutions to the cloud. For example, there is State Bank of India, SBI, there is Transworld, there is Hindalco, there is Reliance, there are a bunch of other companies, including Taj Hotels, that have moved from our on-premise to the cloud-based solution. So we're seeing that migration happening and gaining momentum fairly rapidly.
Okay, your target 5 years from now?
My target 2 years from now would really be less than 2 years from now, would be to be the market leader in the SaaS marketplace. And by 5 years, I would think we want to be the dominant force as far as the cloud-based applications are concerned. And I think we are well on our way to that space.
Okay, all right. Keep an eye out on the markets. The breadth of the market is very, very strong today, but Pidilite, that's a stock that suddenly moved lower. So I think we should pull the intraday chart up there. And also another one is Castrol. I think the intraday chart of that one as well should come up for you on the screen. Both of them moving mildly lower in an otherwise pretty vibrant market. Slip in a short break, come back. We'll tell you how to trade the Nifty. Ashwini Gujral and Prakash Kaba, both of them will be with us.